Another weekly episode of Rental House versus High Income ETFs, episode 8. We are finishing up the month of May. This experiment involved selling a rental house, taking the money from that, putting it into some covered call ETFs, and I'm keeping track of how the ETFs are doing compared to how things would be going if I would have kept that house. Some things I'm not factoring in so far: maintenance costs of the house. I'm not factoring in if I sold the house, closing costs, and all those things. What I'll do is at the end of the year, I'll do an episode and I'll include average maintenance costs of the past 3 years or so, and then maybe even toss in if I were to sell the house at the end of the year and compare things that way rather than doing that each week. So there you go. Another announcement, if you are watching this on the Investing with Dana YouTube channel, I'm going to quit posting on that channel. I'm going to remove that channel and move these videos over to my other channel, Adventures with Dana and Jody. Maintaining multiple YouTube channels just is a little bit of a hassle, and I'm just trying to simplify things. We are doing more traveling now that I have retired, so I'm trying to streamline things a little bit. Neither channel is monetized, so I'm not worried about anything like that. Just trying to simplify things. And if you're on the Adventures with Dana and Jody channel watching this, I'd like it if you would subscribe. And let's get right into it. So this week we're sitting at 68,793 in equity. I'm using margin 66,129. Down here is what I'm holding. I'm holding 500 shares of GIAX, 200 shares of SPYI, 600 shares of AIPI, and 2,700 shares of QDTE. I've been tossing in this chart each week and getting a better idea of what the market is doing overall. So this is the S&P 500 SPY, and this is the Bollinger Band. It looks like we hit the bottom around April 9th when things all went haywire. But it looks like we bounced back and the average is going up. The Bollinger Band is trending up. The price is trading above the 28 moving average. So I look for this trend to continue unless there's something major said in the news about tariffs or other things. So this week there's a court order saying that the tariffs are not allowed, and now that's going to be appealed and all kinds of stuff. So I'm not going to go into any details about that. But I think if this was a normal market, things would be trending up and things would be looking good. All right, so what exactly do I own here? The last thing I bought was 50 shares of SPYI back around 518. If you've been watching this channel, you will know that I had decided to start adding SPYI to this. I started out with QDTE, AIPI. It's just those two. Then I added GIAX, and then I added some SPYI. Then I added some more GIAX when it dropped way down to under 15, which was a good move at the time. Then I've added 100 shares of SPYI since then. I will probably add maybe 50 or 100 more shares of SPYI in June. That's my plan as of right now. So what did we do last week? We got some distributions. We got 739 from AIPI. We got $580 approximately from QDTE and $173 from GIAX. And take a look at the monthly total here. So this is the month of May here, down here at the bottom. This is what happened. We got 5 payments from QDTE this month because it was 5 Fridays. We got $100 from SPYI. Here's the AIPI, GIX, and then the most recent QDTE. So for the month, we ended up with $36.63. I was hoping for about $4,000, but we had a couple lower payments for QDTE here. If those would have been around $600 to $700 or even $800, would have been closer to $4,000. The reason why I was guessing $4,000 is because we had an extra payment for 5 Fridays of QDTE this month. So you see monthly totals here. I collapsed some cells here so it would all fit on one page, but you can go back and see what each month has looked like. And this is my chart where I projected how things would go at the very beginning of this project versus how things are actually going. So I had projected that I'd be sitting at 88,000 right now. I'm really sitting at 68,000. I project I'd be up about 25 to 26% since November. I am actually down about 2%. I also projected this would grow about 1% per week. This week I was up 4%, but you can see had this big down week back here, messed up my entire thing here. That was back around first, second week of April. So we're slowly coming back. We're getting close back to 70,000, which is where we started. So hopefully just keeps creeping up and gets somewhere close to where I expect it to be. And this is about comparing the rental house to the ETFs. So this is what the house would be doing if I would have kept it. Like I said, I'm collecting $700 a month in rent. Each month I pay $80 in insurance, $200 for taxes, and I will be sitting at about $3,300 in cash in my checking account. And that's just basically the positive cash flow for each month. And equity in the house is $71,864. I'm estimating that grows at 4% per year, which is $233 a month. So total equity in cash should be at $75,000 right now for that house. In the last slide here, the house is sitting at 75 to 24, like we just said. ETF value is 68,796. So far, the house is up $6,400 since the beginning of this project from last November 2024. If you have not subscribed, go ahead and subscribe to the Adventures of Dana and Jody YouTube channel. I'm moving these videos over to that channel, and I'll be closing down the Investing with Dana YouTube channel within a week or two. We'll talk to you next week.